Ladies and gentlemen, listen carefully. A massive shift is happening right now, and most people have absolutely no idea what's coming. Silver shortages are no longer a distant possibility. They are forming in real time, and the driving force behind this explosive pressure on supply is something the world is racing toward at full speed: the global solar energy expansion. Every new solar panel, every solar farm, every renewable project being built across the world consumes silver, not in grams, but in huge industrial quantities. Silver is the most conductive metal on Earth, and there is no substitute that delivers the same efficiency at scale. That means the more the world pushes toward clean energy, the more silver disappears forever from the market. Silver shortages are forming in real time, and this isn't just a dramatic warning, it's a reality unfolding quietly but powerfully beneath the surface of the global economy. What makes this moment so critical is that the majority of people are completely unaware of how fast the situation is changing. Silver is not just a precious metal used for coins and jewelry, it is a vital industrial resource woven into the foundation of modern technology. Every smartphone, every electric vehicle, every solar panel, every advanced medical device, every AI-driven machine depends on silver's unmatched conductivity. And because the world is expanding technologically at the fastest pace in human history, the demand for silver is rising at a speed that mining operations simply cannot match. The phrase "forming in real time" means that the shortage isn't a future event that might happen. It is already underway. For years, global silver demand has been surpassing supply. The mining industry has repeatedly fallen short of producing enough silver to meet industrial and investment needs. What filled the gap in the past were above-ground stockpiles, recycled silver, reserves held by institutions, and previously accumulated inventories. But now, these stockpiles are being drained at a historic pace. Manufacturers are pulling silver out of the market faster than it can be replaced. Recycling, once thought to be a backup source, is nowhere near enough to cover the deficit because much of modern silver is used in tiny, non-recoverable amounts inside electronics that end up in landfills. This is why the shortage is not just growing, it is accelerating. Industrial sectors are expanding at the exact moment that silver production is plateauing. Mining companies face deeper ore grades, rising extraction costs, geopolitical challenges, and environmental regulations that slow down new production. Many of the world's major silver mines are aging, and new discoveries are rare. Even when a new silver deposit is found, it takes 7 to 12 years to move from discovery to production. Meanwhile, global industries cannot wait a decade. They need silver now, and they need more of it every year. When demand rises and supply stagnates, a structural imbalance forms. But what makes the current imbalance more dangerous is that it is being ignored by mainstream investors. They see the price fluctuating day to day and assume everything is normal. What they don't realize is that physical silver, the actual metal that industries need, is being consumed permanently. Unlike gold, which is mostly stored and recycled, silver is destroyed in the manufacturing process. Once used in solar panels, batteries, chips, or medical equipment, it becomes economically impossible to extract it again. That means every year, millions of ounces of silver vanish from circulation forever. This steady disappearance creates invisible pressure beneath the surface, building quietly until it erupts. The world is heading toward a point where industrial buyers will compete fiercely for limited physical silver. When that competition begins, shortages will move from being a hidden problem to a global crisis. Factories may face delays, manufacturers may have to pay higher premiums, governments might step in to secure strategic supplies, and when this shift becomes public, investors will rush in as they finally understand the seriousness of the deficit. That is why silver shortages forming in real time is not just an interesting economic trend. It is a signal of a major shift in the global system, a metal essential to energy, technology, and modern infrastructure is slipping into scarcity. And once the world wakes up to what is happening, the consequences will be felt everywhere. From industrial production lines to financial markets, the solar energy boom is rapidly becoming the single biggest force consuming the world's silver supply. And this trend is transforming the metal from a simple commodity into one of the most strategically important resources on the planet. What many people don't realize is that every solar panel relies heavily on silver because of one fundamental fact: silver is the most electrically conductive metal on Earth. Nothing else, not copper, not aluminum, not any advanced alloy, matches silver's ability to efficiently conduct electricity. Solar cells need that unmatched conductivity to convert sunlight into usable power. Without silver, the global solar industry cannot function. And as countries push aggressively toward clean energy targets, the pressure on silver demand is rising at a pace the world has never seen before. Right now, solar installations are expanding in nearly every major economy. Nations are building solar farms the size of cities. Companies are adding rooftop panels to factories and corporate buildings. Homes around the world are shifting to solar as energy costs climb. Governments are introducing subsidies, tax credits, and climate mandates that force rapid, renewable energy adoption. This explosive growth is not slowing down, it is accelerating. Analysts expect the global solar industry to grow by hundreds of gigawatts every single year. But here is the problem. Every one of those gigawatts requires a massive amount of silver. The more solar panels get built, the faster the world drains the available silver supply. What makes this situation even more urgent is that the solar industry is now outcompeting other sectors for the metal. Electronics manufacturers, tech companies, automakers, and medical device producers all need silver too. But solar is now the heavyweight player, consuming more silver annually than many people ever imagined. In fact, solar panel production alone uses tens of thousands of metric tons of silver each year, and this number continues to climb. Even if producers manage to slightly reduce silver content per panel with efficiency improvements, the overall demand still rises because the number of panels being installed increases far faster than any reductions in silver per unit. The global push toward renewable energy means that nations are now in a race, not just for energy independence, but for the materials needed to build that energy future. Silver sits at the heart of this race. As more solar farms get planned and more factories shift to green energy, industrial buyers are quietly competing behind the scenes to secure long-term silver supply contracts. Some companies are buying years' worth of silver in advance to avoid future shortages. Others are building strategic reserves. This hidden competition rarely makes headlines, but it is reshaping the supply chain in profound ways. Unlike other metals, silver cannot easily be replaced in solar technology. Alternatives simply don't offer the same performance. That means the solar industry is locked into silver, and the more the industry expands, the more silver it consumes permanently. And here's the critical part. Much of the silver used in solar panels is extremely difficult to recycle. The metal is applied in microscopic layers that are economically challenging to recover once a panel reaches the end of its life. So the silver used today in solar energy effectively disappears from the market for decades. This is not a temporary consumption. It is a permanent removal of silver from circulation. As solar installations continue to surge, The world faces a future where demand for silver could exceed supply by unprecedented margins. If solar demand doubles, triples, or even quadruples, which experts believe is likely, the strain on the silver supply chain will be severe. We could see manufacturers paying higher premiums, supply delays, and intense competition between industries. And when investors finally recognize this unstoppable trend, the financial markets may react dramatically. This is why the solar energy boom isn't just another technological advancement. It is a powerful force eating the supply alive, consuming silver faster than miners can extract it and faster than recyclers can recover it. The world's transition to green energy rests heavily on a metal that is becoming increasingly scarce, and the consequences of this imbalance will shape the future of both renewable energy and global economics. Mining output is not increasing fast enough to keep up with the world's accelerating demand for silver, and this imbalance is at the core of the coming global shortage. For years, analysts have warned that silver production is stagnating, but now the problem has become unavoidable. Mines are struggling, ore grades are falling, costs are rising, and the entire supply chain is under pressure. While industries such as solar energy, electric vehicles, electronics, and medical technology demand increasingly larger quantities of silver, the mining sector simply cannot produce enough to satisfy this explosive growth. This widening gap between supply and demand is not temporary. It is structural. One of the biggest reasons mining output is failing to grow is geological reality. Most of the world's major silver deposits have already been discovered and heavily mined. The easy-to-access, high-grade silver near the surface has largely been extracted. What remains today is deeper, harder to reach, and more expensive to process. Mining companies must move enormous quantities of rock to recover smaller and smaller amounts of silver. This lowers production efficiency and raises costs at the same time. Even with advanced mining technology, the natural decline in ore grades makes it difficult to increase output meaningfully. Another major challenge is that silver is rarely mined alone. It is typically a byproduct of mining other metals, such as copper, lead, zinc, and gold. That means silver production is tied to the profitability of those primary metals. If copper prices fall, for example, mining companies reduce copper production and silver production drops with it, regardless of silver demand. The result is a supply system that cannot respond directly to rising silver needs. Even if the world urgently requires more silver, miners cannot simply turn up the silver output. The structure of the industry limits how quickly production can grow. Environmental regulations and permitting delays also slow down new mining projects. Even when a promising silver deposit is discovered, it can take 7 to 12 years or even longer to secure permissions, conduct environmental assessments, build infrastructure, and begin actual production. In some countries, political instability, community resistance, or legal disputes can stall projects indefinitely. This means the mining industry cannot react quickly to demand surges. While solar installations may double within 2 years, a new mine cannot open anywhere near that fast. At the same time, existing silver mines are aging. Many of the world's largest and most important mines are approaching the end of their productive lives. Their output is declining naturally, even as the world needs more silver than ever. Replacing this lost supply requires major investment, but mining companies have not been aggressively expanding. Many firms hesitate to pour billions into new projects when silver prices remain artificially low due to paper market manipulation and short-term speculation. This underinvestment has created a long-term supply deficit that grows deeper each year. Recycling, once seen as a potential solution, is not enough to fill the gap. Much of the silver used today is utilized in tiny quantities inside electronics, solar cells, and industrial components. Recovering that silver is expensive and technically difficult. As a result, recycling rates remain low, and the majority of industrial silver is lost permanently once used. This means the world depends heavily on mining, but mining is failing to keep up. As industrial demand rises and mining output remains flat or declines, the pressure on the global silver supply chain intensifies. Factories will eventually face delays. Manufacturers may pay high premiums, and industries may have to compete with each other for limited physical silver. This competition could push prices far higher, not because of speculation, but because the physical metal simply isn't available in the quantity the world requires. This is why mining output not increasing fast enough is more than a simple supply issue. It is the heart of a global crisis. The world is entering a new era where demand for silver is expanding rapidly, but the ability to produce it is stuck in place. Unless a major discovery is made or new technology revolutionizes extraction, the imbalance will continue to grow, setting the stage for one of the most significant supply squeezes in modern history. Industrial sectors like solar energy, electric vehicles, 5G infrastructure, medical technology, and advanced electronics are now competing for limited silver supplies, and this competition is becoming one of the most important but least understood economic battles of our time. Silver is no longer just a precious metal that investors collect. It has become an irreplaceable industrial resource that modern civilization depends on. As technology expands faster than ever before, each industry is pulling harder on the same limited pool of physical silver. This growing tug-of-war is pushing demand to record highs and creating a pressure point that the mining sector simply cannot relieve. What makes this situation even more alarming is that silver is used in tiny, essential quantities in almost every advanced technology, meaning demand is constant and unavoidable. The solar industry alone now consumes enormous amounts of silver, but it is not acting in isolation. Electric vehicle manufacturers depend on silver for batteries, charging systems, power inverters, and onboard electronics. As EV adoption grows globally, automakers are securing more silver for production lines. At the same time, 5G networks require high-performance components that rely on silver's unmatched conductivity. Every tower, every device, and every high-speed communication chip needs silver to operate efficiently. Meanwhile, the explosion of AI technology and data centers has created another surge in demand. As servers, semiconductors, and high-efficiency cooling and power systems all use silver in their manufacturing process. Medical technology is another massive consumer. From X-ray machines and surgical tools to antimicrobial coatings and RFID healthcare tracking systems, silver is used widely because of its conductivity and its unique antibacterial properties. These industries cannot simply reduce their silver usage or switch to cheaper alternatives because silver performs critical functions that no other metal can replicate. Copper and aluminum do not offer the same efficiency, gold is too expensive, and no synthetic material has been developed that can match silver's versatility in electronics and energy systems. This creates a perfect storm. Multiple industries are locked into silver, and all of them are scaling up production at the same time. Solar installations are multiplying, EV production is skyrocketing, global communications networks are expanding, and consumer electronics demand continues to rise. Each of these sectors is essential for the future economy, and none are willing to slow down. As a result, industrial buyers are quietly competing behind the scenes to secure long-term silver contracts before the shortages become public knowledge. Manufacturers are increasingly purchasing silver in advance, stockpiling inventories to avoid disruptions. Some companies have even begun exploring the possibility of buying stakes in mining operations to guarantee their own supply. This battle for silver is still largely invisible to ordinary consumers. Phones, tablets, cars, and electronics continue to appear on store shelves, giving the illusion that everything is functioning normally. But behind the scenes, supply chains are tightening, lead times for certain components are increasing, factories are adjusting production plans based on silver availability. Some manufacturers are attempting to reduce silver content in components, but these efforts do not lower overall demand because the number of electronic devices and energy systems being produced is rising far more quickly than any efficiency improvements. What makes the situation even more concerning is that this industrial competition intensifies the pressure on physical silver inventories. These industries require real, tangible silver, not paper contracts, not digital derivatives. They cannot manufacture a solar panel or a semiconductor with an ETF. As industries consume more and more physical metal, available stockpiles shrink because much of the silver used in industry is not economically recyclable. A significant percentage of the global supply disappears permanently every year. This means that every device built today makes tomorrow's supply even tighter. Eventually, industries may face direct competition where they must bid against each other for limited quantities of silver. Solar manufacturers may compete with EV companies. Semiconductor producers may compete with renewable energy firms. The sector willing to pay the highest price will win, and all others will be forced to adjust, delay, or reduce production. This situation has the potential to reshape global manufacturing, energy development, and even geopolitics. This escalating industrial competition for silver is one of the strongest signals that a major supply squeeze is coming. The demand curve is accelerating in multiple directions at once, and all of it is converging on a resource that cannot be produced quickly enough to keep the world moving at its current pace. Above-ground silver stockpiles are being rapidly depleted, and this silent drain on physical inventory is one of the most important, yet least understood, warning signs of an approaching global shortage. For decades, these stockpiles acted as a hidden buffer that balanced the market whenever mining output fell short or industrial demand suddenly jumped. Investors, governments, and large institutions stored millions of ounces of silver in vaults around the world. Manufacturers relied on these reserves during periods of high demand, and this excess metal kept the market stable even when production was not rising. But today, that cushion is disappearing at an alarming rate. The world is now consuming silver faster than it is being mined or recovered, and those once comfortable stockpiles are draining toward dangerously low levels. The reason this matters so much is simple. Once above-ground inventories fall below a certain point, industries have no backup. They cannot simply walk into the market and purchase unlimited amounts of physical silver. They will be forced to pay higher premiums, scramble for supply, or reduce their production altogether. What many people don't realize is that above-ground silver is not evenly distributed or easily accessible. A large portion is held in private hands, in long-term investment vaults, in industrial warehouses, or by governments that rarely release their holdings. Only a fraction of the world's silver stockpiles is available for immediate industrial use, and it's this fraction that is shrinking the fastest. Industrial demand has exploded in recent years, especially from solar energy, electric vehicles, and electronics manufacturing. These industries consume enormous amounts of silver, and much of it is used in ways that make the metal difficult or impossible to recover. Solar panels, circuit boards, sensors, medical instruments, all these products contain small amounts of silver that are economically impractical to recycle. This means that once the silver is used, it is essentially gone forever. It is locked inside landfills, broken electronics, or industrial waste streams that no recycling plant can process profitably. As a result, every year millions of ounces of silver leave circulation permanently, putting intense pressure on remaining inventories. Investors are also contributing to the depletion. In times of economic uncertainty, inflation, currency instability, and geopolitical tension, people flock to precious metals as a store of value. Silver, being far more affordable than gold, attracts both small-scale buyers and institutional investors. When these buyers purchase physical silver bars and coins, those ounces are taken off the market and stored for long-term holding. They do not return to circulation quickly. This trend has grown stronger in the past few years as more people recognize the role silver plays in the future energy transition. Many investors feel that the metal is undervalued and are accumulating aggressively while prices remain artificially low. At the same time, large industrial consumers have begun securing long-term contracts to lock in future silver supplies, fearing the market may tighten further. Some companies have even started quietly increasing their own stockpiles, storing silver as a strategic resource. This hoarding behavior, combined with rising industrial consumption, accelerates the drain on available inventories. The shrinking of above-ground silver stockpiles affects the physical market first, not the paper market. While trading platforms may show balanced supply on paper, the real-world availability of physical metal tells a different story. There have already been instances where wholesalers struggle to source large quantities without delays or premium spikes. This is a clear early signal that the physical market is tightening, even if price charts have not yet reflected it. Once stockpiles reach critically low levels, the shortage will no longer be theoretical. It will become visible. Refiners will face delays, manufacturers will pay higher premiums, and industries may compete for the remaining available silver. This transition from quiet depletion to open scarcity could trigger a major price revaluation because physical shortages always overpower financial speculation in the long run. The rapid decline of above-ground silver reserves is therefore one of the strongest indicators that the world is heading toward a supply crisis. When the cushion disappears, the market has no safety net left. And the moment industries realize this, the scramble for physical silver will begin, pushing the metal into a new and potentially explosive era of demand-driven scarcity. A major supply squeeze in silver is no longer just a possibility. It is becoming an inevitable outcome of the massive imbalance between soaring demand and limited physical availability. What makes this situation so powerful is that the world has not yet fully realized what is coming. The signs are already visible for those paying close attention. Industrial consumption is rising at record speed. Mining output is stagnating. Above-ground inventories are being drained, and key industries are quietly locking in long-term supply. When these forces collide, the result is a price surge not driven by hype or speculation, but by the hard reality that the metal simply cannot be sourced in the quantities the world requires. Once the market wakes up to this physical shortage, the shift will be dramatic and irreversible. The supply squeeze begins in the physical market, not in paper trading, not in futures contracts, and not on price charts manipulated by short-term traders. It begins when manufacturers try to place large orders and discover that delivery times are longer than expected, premiums are rising, and wholesale inventories are much lower than they appear. This hidden tightening is already happening. There have been numerous periods where mints, refiners, and wholesalers struggled to keep up with demand for physical bars and coins. These struggles are early signals that deeper stress exists beneath the surface. And unlike temporary spikes, this pressure is structural because it is being driven by long-term trends that will only grow stronger. The industrial world is expanding at a pace never seen before. Solar energy is multiplying rapidly. Electric vehicles are entering mass production. Semiconductor demand is exploding due to AI technology. Medical devices, military applications, and advanced electronics are all consuming silver in increasing quantities. Each of these industries needs real metal, not paper promises, to function. When multiple sectors fight for the same resource, scarcity becomes unavoidable. This is how supply squeezes begin, slowly at first, then suddenly, all at once, when demand overwhelms the system. Once industrial buyers start to experience delays or difficulty securing supply, they will react quickly. Large corporations will increase their stockpiles, locking up even more physical metal. Some may try to sign multi-year agreements, buying years of silver ahead of time. This behavior can trigger cascading effects. As one industry starts hoarding, others panic and follow. The moment companies fear they may not have enough silver to keep production running, the scramble begins. This is the stage where a supply squeeze transforms into a global frenzy. At the same time, investors will enter the picture. When news of shortages spreads, whether through rising premiums, delayed delivery times, or reports of stockpile depletion, the public will rush to secure physical silver. Investor demand can spike dramatically during periods of uncertainty, economic instability, or inflation, and a developing supply crisis would amplify that effect. The combination of industrial and investor demand hitting the physical market at the same time creates a perfect storm. This is the scenario where silver supply disappears from shelves, online dealers sell out, and premiums skyrocket far beyond the spot price. The key point is that once the world realizes the shortage is real, the reaction will be extremely fast. Markets are slow to recognize brewing problems, but when they finally catch on, the shift is sudden and intense. It won't matter what futures markets say. It won't matter what price charts show. Physical shortages override financial speculation every time. When buyers need silver and cannot find it, the price must rise until supply and demand find balance. And with silver, that balance could occur at levels far higher than anyone expects. A supply squeeze of this magnitude has the potential to reshape global markets. Industries may have to delay production. Investors may be unable to buy physical metal at any reasonable price. Governments might step in to secure strategic supplies for renewable energy and technology. And once prices spike due to genuine scarcity, they may not return to old levels because the underlying shortage will not be easily fixed. The coming squeeze will be driven not by emotion, but by math. More silver is being consumed than produced, and that gap is widening. When the world finally recognizes this reality, silver could enter a phase of explosive demand and limited availability, marking one of the most significant supply shocks of our time.